The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 17th magical Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day out there. Let's make sure that you and I, that we do everything in our power to have just the best possible day that we can. Let's always remember that what's talked about, well, that's a dream. What's envisioned becomes exciting. What's planned becomes possible. But folks, what is scheduled? Well, what's scheduled is reality, and I want to thank you for scheduling some time with me here this morning. I am grateful for your presence here. I'm here to serve you, so go ahead, give me a call at 877-927-6648 or internationally, 727-445-1044. That way you and I, we can go on a safari hunt. We can go looking for bulls and bears out there. Remember, if you've got a question, well, someone else has that exact same question, so don't call in for me. Don't call in for you. Do it for someone else. A random act of kindness. That's the way to kick off your day. It is Magical Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Kind of a flattish style market out here. The Dow's off 10 points. The S&P down about 2. The Composite off 7. Russell down 1.5. The DAX is up $1. The FTSE's up 3 points out here. Gold's back $2, which is holding up pretty well considering the euro, which is trading a bit lower here this morning. That's putting some oomph into the U.S. dollar index. King dollar up 382 ticks as we speak, trading out at 87.97 or so. Light sweet crude back 55 cents right now. Lead the charge, the upside. Allergan, that's up $14, up 7%. Activists up at 9.37. Regenerant Pharmaceuticals up $8. Zillow up 8. Baker Hughes up 6. Trulia up 3.50. Tata Motors up a couple of bucks out there. To the downside, LinkedIn down $8. Although LinkedIn is going to make a run for its highs at some point in time. If the markets move higher today, right now you got the VIX index. That's where we left off the last hour. So, Stevie, might as well just go ahead and pick up there. Now, this chart here that we're looking at, just to give you an idea, remember I have suggested here for a while, several weeks now, right? I think Friday was week number 2. That was week number, was it week number 2? I think that it might, I don't know, I can't, October 30, yeah, it was week number 2. Of course it was week number 2, since that high on October 31st, and I said, hey, the markets are going to trade, they're going to consolidate to pull back. Well, now we're into that pullback area, which should occur today, tomorrow, Wednesday. It should occur. Originally, I was thinking we'd make a low coming into this coming Friday. I'm going to move that back a week, move that back to Thanksgiving. Friday out there is perhaps the low point for the beginning of the next Santa Claus rally out here. Now, if you're watching this on Tiger TV, thank you so much for doing that. If you're listening on your radio or your mobile device, we really appreciate that. Of course, you can get the archive of this show. This is on Channel 10. The archive of the first hour is on Channel 9. You can get the live stream, so you can get it so many different ways. The chart that we're looking at here, the bottom portion is the VIX index. The upper portion is the S&P 500. Now, what I want you to notice, I utilize a number of different tools to help us understand what's going on inside the marketplace. And then you just kind of say, screw the emotions out there. Just simply, you can watch the emotions on the stock chart. Those are candlesticks out there. Just go pay attention to patterns that are out here, and it just kind of clears the mind. It doesn't mean that everything is going to always work out, but if we do take a look at other patterns, if you're watching this on Tiger TV, the bottom portion of my chart, which happens to be the VIX index here, you can see these nice little rising bottoms out here, as the S&P 500 was also making higher highs. Let me get my cursor going out here. That'll make it a little bit easier for me to actually follow along. Always visible, always visible. There we go. Now we got our cursor. So you come back into the time period here in October of 2012. So we're going back a few years here in time just to kind of give you an idea for how this pattern actually works. Makes a slightly higher high as the VIX index here was also making higher bottoms out there. Of course, that led to a decent correction that formed the November 15th, 2012 lows out there. Today's November 17th. Does that have to happen on November 5th? No. But kind of interesting, is it not? Oh, I have to say it is. Now take a look at the S&P 500. That's the upper portion of the chart out here. This is taking you back into March of 2013 in through the April of 2013 time frame. Again, it was moving higher. We had the VIX index here also making higher bottoms, and we saw a little bit of a correction. I suspect that's the kind of style correction we're going to see this time, but I'm not going to predict how deep the correction is, how fast, how furious. I'm just going to say that we're going to see one. Now, correction is probably not the right word. I'm looking more for a retracement than I am a correction out here. However, I'm always open to both sides of the trade out there each day, each moment. We just simply, as technicians, want to come back and take a look at the charts and see if there's new information revealed to us. If you take a look at the pattern back in January of 2014 out here, the highs that were made back on December of 2014, we can see that December 2013, December 31st, we can see that the S&P moved sideways to slightly higher, and we saw a little rising bottom pattern inside the VIX index back then. Of course, that led to a nice little sell-off into the February 3rd, 4th, 5th time frame inside of the marketplace out there. We saw a similar pattern out here. This is back in the highs that occurred back in July of 2014. We saw the S&P kind of moving slightly higher. We saw these rising bottoms inside of the VIX index. Again, that was a signal. And so where are we at now? Guess what, folks? We're at the same place, different day. If we see the VIX is trading up at 1432 right now, 50-day exponential moving average is at 1517. That's one thing to be paying attention to. What you should be more concerned about from the bullish side, and over the longer haul, remember, I'm just talking now the kind of daily charts out here. I'm not talking intermediate term. You should be outright, gosh darn, and I just use that word darn because it rhymes with, yarn. I don't even know what that means out there, but you know what I was really going to say. You should absolutely be bullish. Intermediate term, long term, you should be bullish. Now I'm just giving you the idea of what's really going to take place. That way you see it happen, you won't be so scared because you say, hey, Stevie said this is what to expect out here, and son of a gun if it's not happening out there. So what we ought to see take place at some point in time in the very near future, because if you take a look at the chart patterns of going back just 2 years, and folks, we can go back a lot further. We can go back all kinds of years and look for the same chart pattern that is out here. We're just simply taking a look at over the last couple of years out here, and we've got the same kind of pattern that has formed. So what does that say? It says we see some kind of retracement. What is it that you don't want to see if you're a bull today? You don't want to see the markets actually move higher with the VIX doing the same kind of a thing out there. I suppose that's what you don't want to see. Anyways, this is giving us our signal as to what's going on inside of the market, but inside of the S&P 500, which is a pretty decent swath of the market. Let's go take a look at the wider swath of the market. Let's go take a look at the summation index, the price oscillators for the New York Stock Exchange. Oh, this is a problem in River City. Now, not totally a problem here just yet. Right now, you've got the price oscillator out at 9.98. Let me come back and see where we at with regard to net declining. We've got net declining issues in the wider swath of the market. That is for darn sure out here. Yeah, you're at 525, minus 525 inside of that index out here. And I think all you really need today is I don't remember, 6 something. What is that number out here? What is that number? Let me see if I can find that number for us. So you're at minus 416 as we speak right now. Well, that didn't work real well. Let me try this tool. Minus 676. So you're minus 411. So it'll be real important today what happens with, in my opinion, with what happens inside of the New York Stock Exchange out here. You get more than 676 net declining issues out here. The wider swath of the market is just going to confirm what we just looked at inside the correlation between the S&P 500 and the VIX index out here. So that's what's going on inside of that. chart as we speak. Once you dip below there, that says, okay, you've seen a change in trend. Are we there yet? No, we are not there yet. What has the ES Mini done at this stage here? Is it poked up to about the 2037, 2038 level? It just made a 1-to-1 A to B equals CD on a 30-minute chart, but it did it with a nice wide-ranging bar out there. I suspect 2039.25 to be a fairly decent level of resistance out here. But nonetheless, here's the message inside of the New York Stock Exchange. Let's go check out the message inside of the NASDAQ Composite. What is it doing? Man, it's also, now it's also very close to getting a summation. Its summation index turning to the downside. You're not there just yet, but boy, you are not that far away. So here's another. We're looking at the composite, the wider swath of the market. What's it been doing? It's been making higher highs with the price oscillator that's been declining out here. So that suggests also again retracement. Don't jump on. Please don't jump on board and just short the heck out of the markets. Or anything along these lines out here. We're in the favorable seasonal cycle. We just made a major significant low, a Gartley buy pattern out there, a butterfly buy pattern out there if you're inside of the Russell 2000. So longer term, the markets are going to move up into the end of the year, maybe beyond the end of the year out there. We've got plenty of signals. It's just the market here needs to do some work to the downside out there. In fact, ideally, I don't know if this will come to fruition, but ideally, it'll be a scary low. It'll be a big boom like we saw inside of the Nikkei last night, down 3.5% or something like that. Ideally, that's what you'd really prefer. Just enough to start people to start saying, maybe that Santa Claus rally, we've already gotten it in for the year out here. But this is exactly what the stock charts are communicating to us as we speak right now. So you got the composite, and it's actually kind of showing some weakness. What the market's actually doing. Let me switch over here, see what the markets are doing. You got the Dow's up slightly, and the rest of them are basically kind of light-headed out here. Let's go take a look at the Dow. Let's go take a look at its summation index. Again, just 30 stocks out here. This has been moving to higher ground out here. It's also got a declining price oscillator, although it's held up better than the composite and the S&P 500. But it's only a matter of time before she plays catch up as well. So we've got enough of the signals out here that the market wants to make a move to the downside, some kind of retracement out here. We've even got the currency pairs that are joining in and giving us the same message. You've got your friend in mind, the Euro-Japanese yen. She's made a 100% move by getting back to the swing points out here from the trading session of December 27, 2013, when our markets were putting in a high back then. So it's made a 100% move. We have seen some give back out here inside this currency pair. No reversal signal or anything, but I expect this currency pair will go ahead and pull back to about 141.76, 138.82 out there at that stage. Again, it's a directional correlation indicator tool out here. It's not a pip for pip, tick for tick kind of currency pair. So you've got a lot of signals out here, a lot of signals. It all depends on how the day closes out today. Maybe today's not today. Maybe it's tomorrow. It's Wednesday. But I can tell you it's a coming attraction. So get your popcorn ready. Get some Kerrygold butter out there. This is Steve Rhodes, TFNN. Be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 12, S&P 60 cents, composite down 4, Russell's up about 250. And let's go out to the city of brotherly love, to one of the Tigers that we love so much here at TFNN, our man John. John, how you doing this morning? How was your weekend?
I'm very well. Enjoyed watching the Packers play the Eagles yesterday, and
now who do you? Because you're kind of from both cities. So who do you pull for?
See, that's why that show yesterday was a beautiful thing. I could be pleased with either outcome.
I like that. It's nice when you're in a trade where you can't lose, right?
You gotta love that.
Now,
Steve,
have you been to some games in at Lambeau Field?
Steve, the first Lambeau game I was at was 1964 when I was a baby, so the answer is yes.
Oh, that's great. That's great. I don't know how they do that in that kind of weather out there. But anyways, you wanted to take a look at the GDX, so tell me what you're doing, how I can help you.
Steve, of course, a topic for many is asking the question on gold and miners, has an important bottom been achieved? And, of course, time will tell the answer to that question. I make an observation and wanted after I make that observation, if you could comment or if you could share any clues that gives to you personally. The observation is this. Both the price of gold and GDX, which is the ETF tracker for the HUI Gold Bugs Index, both came down on October 5th through the 8th and tested the multiple bottoms that occurred over the past 18 months. In the case of gold, you got to 1180, 1183. And in the case of GDX, you got down to $20.10, $20.20, that sort of area. They both bounced into October and then plunged that week of October 27th to lower lows.
Yes.
Now, having made those lower lows, 1130 in gold and 1650 thereabouts in GDX, we've had a bounce. And gold, currently at 1185, has now recovered and moved back above that series of multiple lows in that 1180 area. GDX is currently 1910, a dollar underneath that 2020 area.
Yes.
So I make this observation that GDX was far weaker on that sell-off starting the week of October 27th, and thus far on the rebound has not yet gotten back above those lows like gold has. My question is that observation significant to you in any way? And if so, what does it tell you?
It tells me, and that's a great question, and thanks for asking it. It tells me, John, that as we came into the October 30th and 31st time frame, there are a number of hedge funds, mutual funds, lot of large funds out there that have their year end on October 31st. And so I consider that what we saw actually taking place on those last 2 days was people saying, I can't have any of these equities inside my portfolio. I don't want those statements going to my clients out there. And so we saw some of that kind of puking that was going on. What I've got on my screen here right now is the gold contract and the GDX, and it has a direct directional correlation. So I actually like the fact that, and it's really going to be gold that's going to lead what the mining sector is going to do out there. So I like the fact that it has gotten back inside what we like to refer to as the lower part of its range out there, or above the lower part of its range, getting back above that October 6th time frame out here. So I don't, and inside of the GDX, there's some real dogs out there. And especially if you take a look at the top 10, which represent 51, 52% of the weighting structure, you got Goldcorp, Barrick, Newmont, Franco-Nevada, Silver Wheaton, Randgold, Newcrest, AEM, Eldorado Gold. I think those are the top 10 out there. And some of those, have performed poorly. And then because of the weighting structure inside of the GDX specifically, those are going to impact that. So I don't know if you're still on the line, John.
I am.
Okay. I'll continue looking at it, and if you want to stay, we can talk about it further, because I think everybody has some interest in it. Maybe you can share some of your views as well. This is Steve Rhodes. Yep, this is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Before we went in that break, we were talking with John about the about gold, the GDX. So the first place, John, you still there?
I am, Steve.
So the first place I wanted to start with. So that's kind of my thoughts on the the GDX not acting as well as, let's say, gold and getting above that level. How does that sound to you, or what are your thoughts with regard to that?
Steve, yeah, to me, the comment you made right off the top, I think it strikes me as being a good one, namely your comment that there are a number of players in the marketplace, mutual funds or hedge funds, that have fiscal year ends of October 31st, and that type of buyer might have been on the margin acting as more aggressive sellers, just get me out by the 31st, so it's off my books.
Yeah.
That's a helpful piece of input, Mike, and I'll follow that up by just observing, as Tom O'Brien has pointed out in the past couple of days, there are distinctly a number of mining equities, higher quality, less leveraged, more soundly run enterprises whose stocks did fall under the October 5th/8 lows, plunge, but come right back. And, Silver Wheaton, AEM, Pan American Silver are a couple, in addition to Royal Gold and Franco-Nevada, of course.
Yes.
So
and they had some big days on Friday. Pass. Big volume to the upside on that big wide ranging bar. So you're exactly right.
Let me ask you one last direct question, and that is this. The fact that GDX has not yet recovered back above the October 5th and October 8th lows up there at $20.20, is that, to your mind, a warning in any way that gold has not produced anything more than a merely tradable bottom or tradable low, just a reaction bounce, or not?
Well, it's a couple of things. I'll answer it this way. One of my favorite patterns when price gets stretched to a level where there's going to be either good top or bottom out here is when price moves, in this case here, when price moves lower with less relative weakness. And that's what occurred at the lows on November 5th inside the XAU. So I've just switched over to the XAU to show that pattern to folks on the screen. Now, I also have it as being maybe the 6th of 7th waves to the downside out there. So that's also a pretty good place to come in. And then you got the bulls that actually came in, gave us a nice reversal signal. Prices will not stop falling until you see the bulls actually take a position. And the way that they do that, they can't hide. They have to provide us with a Japanese candlestick signal. They just simply do. That's what I will be teaching on this coming Saturday. And then we got follow-through inside the XAU, the very next trading session on November 7th. There's two moving averages that I like to use, 8 and 13. They just happen to be part of the Fibonacci summation sequence. And in this case here, we're just about to see the 8 cross through the 13. I use the exponential moving average. It hasn't yet, but if it does, that gets me even more on the bullish side. And that's looking at the XAU. What I also look at, and I know you do as well, which is, what's the big money out there doing? We never know whether the data that's provided to the CFTC is accurate or not, but it's good enough for us to follow and get an idea and a gauge as to what the big money is doing out here. And the big money, even during the time period where you had, if my thesis is correct, large players that were dumping stocks that didn't want to have them on their portfolio, you had the large money, the so-called commercial players, move to even less net short position, which how you and I interpret is they're building more long type positions, and so they're getting ready for a significant bottom out here. I think what intrigues me the most about the entire complex, to answer your question, is that more than just a little bounce that we're getting, is really the euro. It's U.S. dollar index out here, and what the large commercials have done, John, is they have taken the position of the U.S. dollar index. They've gotten to the highest net short position ever. If you really take a look at if you go to the CFTC data and you only look at the U.S. dollar index, it's not going to give you the exact picture as if you're to really take a look at each of the currency pairs. What I can tell you on each of the currency pairs is they've taken the largest net short position ever out there, which seems so weird and wacky. But we know the correlation between the U.S. dollar index and gold, which means, the euro being 58% of it. We've got to keep an eye on it. The only way that I think that gold, not the only way, but one way that this is not anything more than just a little bit of a bounce out here, is the euro just has to totally fall apart. And the commercials just continue to build their position where they're trying to get to really continue to increase their level of going to higher net short positions. So it is that correlation. But even today in the marketplace, you've got the euro is weak. It's really relatively weak. The dollar's up. I've got a 10-minute delay up 382 ticks out here. And gold is off what? It's flat. So it's actually kind of holding up pretty well. So I think it's more than just a bounce. I think it's a serious bottom that's being formed. But what do you think?
Steve, I'm going to politely decline to answer that question. I don't know.
Yeah.
I've got some guesses, but I care not to share those right here because, frankly, it's a bit too uncertain for me right in here. So
I'd say if we get that 8-13 crossover, that'll be another nice momentum-ish type move out there. You know, you can't trade those two moving averages, folks. I've back tested them. I back test all kinds of moving averages out there. Moving averages are lagging indicators, so you can't trade one of them. But they're nice additional indicators to hop in on a move out there to help to confirm the momentum. So I would say that's really the next big thing to be watching in the XAU, the GDX, inside of gold as well out there. And the good news is we're going to find out. But I don't think that because all of us Tigers, we use stops out here, it won't be as big of a trouncing as the Eagles took from your mighty Packers yesterday.
No. Definitely true. We'd certainly cut our losses and go home before that happened. Absolutely.
Absolutely.
Thanks so much for your time. Appreciate it.
You bet. Thanks so much for calling. Hey, let's go out to Thailand. Our man Mike wants to weigh in on the conversation here of the GDX. Mike, thanks for calling. Good evening to you. How are you?
Thanks for taking my call, Steve.
Always my pleasure.
I'm having a lousy day, not trading. It's just one of those personal things. But I feel like I owe your last caller, John, a favor here because he had some analysis about going long Brazil. He was wondering if that was a thing to do, and I was saying that's nuts. And then after he got off the phone, I ended up saying, "Oh my God, he's right," and I ended up taking a position, and ended up being a damn good trade, and I made some good bucks off of it.
Well, that's
so
great.
Anyway, go ahead.
That's really great, and John is he's a good guy about sharing, and when he does have conviction behind something, he'll put it out there. So he is great, and thank you for recognizing that. Go ahead.
Okay, and that just goes for the whole point on why I'm calling in. Now I'm in my early 50s, Steve. Okay. And I used to be a specialist clerk on the American Stock Exchange when I was 18 years old. I learned a lot. I've been watching the gold market since I've been 15 years old, okay?
Yes.
And anyway, I'm also a published author. I'd appreciate it if you do not give my last name out on the air because I know you know my last name if you check your emails.
Yes.
And anyway, about gold. I'm a published author on gold. Anyway, what I'm trying to convey to your audience, and namely John at this point, is yes, we have turned the corner on gold. I've been bearish on gold up to November 1st. Ever since they came out with that announcement, what Japan did, Japan's not going this all alone. And I am long the GDX now as we speak. I took that position only 2 Fridays ago, and I'm sticking with it. And anyway, I expect them to keep bashing these shares, but at the same time, you're going to see them rally more and more. I have some excellent supports on some stocks. I am a member of the Den. However, I haven't logged on yet because I'm having all kinds of computer trouble. It's just been one of those things. But if you want to share my contact details with John or send it his way, I'll be more than happy to send him information his way because this thing goes really deep. Your turn. I keep doing a lot of talking, Steve. So your turn.
No, you're doing great, and that's what really the format and everything that we have here at TFNN is all about for folks to call in and give us their viewpoint, and we are just simply one team, and it's really
that's
about
why
trying
this
to.
Is the best, and I'm sorry to interrupt you. That's why this is the best show that I've come across on as far as dealing with financial stuff. You know what I mean? It's got its disappointments. It's got its disappointments, but it is number one. It's the best. There's nothing else that's better. I listen to 2 radio shows. One is not financial. Yours is financial. Yours is the one financial show I listen to. The other show I listen to, which is not financial, is coasttocoastam.com, of which some Tigers have called in. I can recognize their voices and their names. Go ahead.
No, that's great. That's great. Well, thanks for sharing your opinion and also writing. There's nothing like writing out there. I was fortunate enough a couple weeks ago had dinner with James Patterson. and he's a cool character out there. So go ahead.
Refresh me. Who's James Patterson?
Oh, geez, you know what? I think he might have the Guinness World Book of Records for the number of bestsellers out there. So he's written books like, they've made movies out of some of them. Along Came a Spider, a whole bunch of books out there. So pretty well published. I think Kiss the Girls, and I think one of his characters, Alex Cross, out there. So pretty cool. I kind of each morning when I sit down and I write my newsletter, I work on in the evening, take a look at being able to write, each of us sharing ideas. That's the nice forum that Tom has created here at TFNN. And what's always cool about the markets is that you can't have a bull without a bear. So it's always good to look at both sides of the trade out there. And the nice thing about TFNN, in my opinion, is even though all the viewers would like maybe everybody to be on one side and consistent out here, we don't have a party line. We've got individuals who use different technical patterns. They take a look at the market, and we give you our viewpoint, right, wrong, or indifferent. And
that's
to me,
right. You want to know something, Steve? What's so great is that your own chairman of the board, he lets everybody do their own thing, and that's how the whole thing works. You see, you and Tom have been totally opposite on your opinions, but yet he doesn't tell you got to agree with me. You know what I mean? And there's none of this. Well, we got to agree with each other and that kind of crap, because that's when the thinking process totally shuts down. That's when the analytic process shuts down. Steve, I've been a bear, and I think Tom's technical analysis has been so good, even though the market kept rallying. And I just thought your analysis, I totally did not agree with it, although it turned out to be true. Now you know what's happened since October 31st when the BOJ came out with that announcement. They're liquefying the whole global. They're liquefying the whole global financial system, and the most disguised liquefaction is that of the Federal Reserve and the U.S. itself. Otherwise, this whole thing is a big, gigantic liquidity. It's a liquidity thing I expect to continue for at least the rest of the year and well into next year. But go ahead, Steve.
No. It is, and we can. And the thing is that the market's not going to go in one direction completely, either up or down. It doesn't do that. And regardless of how we think the market got to where it is, if we just really stick to our patterns, at least ones that are working, and we're willing to change, when some kind of new pattern is out there that provides us with better information, I think we're all in good shape out here. So the good news is, like, the most important aspect, and this, is that if we use stops, if we use the proper leverage, the proper position sizing out there, we can withstand a prolonged series of either losses, and and if we just simply, this is a game about math. That is all that this is. This is a math exercise, and it's one of the best math exercises out there. So we're going to a break. Hey, Mike, thanks so much for sharing with us. I appreciate it. And thanks so much for supporting the TFNN family out here. We really do appreciate that.
Bye.
You bet. Have a great day. We'll be right back, folks. Markets are relatively flat. Dow is, in fact, only off 41 pennies. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now, very flat market out here. Dow's off half a point. The S&P is down a point. NASDAQ Composite off 16. That's important for us to take a look at. Russell is off 5 points out here. The NDX off 14. The New York Stock Exchange only down 9 points, but at the moment, 562 net declining issues. It's all going to be dependent upon what that looks like at the end of the day. The number there is 676. Anything above 676 says that we will see a change in trend in the wider swath of the market, and it would certainly be an honor for me to teach you some of these great patterns out here, so that you can answer if you're really trying to empower yourself. You want to learn to navigate the markets and all these patterns out here. I've got a fabulous workshop. It is going to be this Saturday. It's a 7-week workshop. It's split between 2 days. It's going to be this Saturday, November 22nd, and then on January 9th we'll reconvene. And during that 7-week layover, there will be a weekly update. You'll have access to me by cell, by email, by Skype, whatever it is. I'm here to really teach you to give you the best that I've got, and that's what's going to happen at this workshop, this 7-week trading course. So all the details on the homepage at TFNN.com. It doesn't matter whether you can be there live or not. I've already got some folks that cannot be there live on Saturday. They've got some other things underway, so they'll take a look at the archive when it's up there. And if there's a specific area that you need me to cover during the workshop, you just send me an email. I want to make sure that I answer your questions. As far as questions about what the market is doing, and if I just summarize it before, we've got Basil. He's up next, and look at the great folks out here. You got Basil Chapman, for goodness sakes. I'm just the warm-up band for Basil. Then we got Basil's the warm-up band for Larry, and Larry's the warm-up band for Daryl White, and Daryl's the warm-up band for David, Daryl Martin, and then you've got Daryl's the warm-up band for David White, and of course David is that warm-up band for Tom O'Brien. And then, of course, Tom, he likes to warm up Andy Heck. Then it just keeps going round and round. Look, what we want to focus on here today is really, are we seeing a change in trend? Are we getting a confirmation of it today? We're close. Depends on the net declining issues. Inside the composite, you're very close. You're down around the zero line. Now, this could also be an area where the market could just truly trample in and bounce from. I understand that. But there are some seasonal patterns and other reasons to believe that what we're going to see is some kind of retracement. And look, a dead cat bounce of 0.382 retracement inside the NASDAQ is going to feel like the sky fell in because that'll take you down to about 4483. You're in the 4700 range, or 4673 or somewhere right around there right now. So that'll feel like the sky fell in, and that's just a 0.382 retracement out there. So the depth of the retracement, I don't have an idea of just yet, just that we ought to see one. And we're getting the signals out here. I don't have a confirming signal yet in the composite. I don't have a confirming signal here inside the New York Stock Exchange, but gosh darn, are we close out there. But when we take a look at the VIX index out here, and that correlation, we've got rising bottoms with the market, the S&P, in essence, having made higher highs to moving sideways out there. Everything is in place. Key level to be watching, in order for what I just said to come to fruition, I'd like the market just to kind of finish out maybe around here or something. I don't want to see the VIX index scream above 15, 17. If it does, it does. We just deal with that. The reason why, that's the 50-day exponential moving average. You bounce above that today, as an example, we'll see some pretty good carnage in the market. And then you'll have a one-day rate of change inside the VIX index, and that always leads to another bounce out there. But that's a selling opportunity, I would believe, going into either this weekend or next weekend out there. So, folks, it's been great to be with you. Thanks for Mike and John calling in. Stay tuned. Our man Basil Chapman, he's up next. Have a marvelous and magical Monday, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.